So today's going to be a fun one. We're going to dig into some price targets and timelines that I'm looking for the upcoming bull run. Of course, none of this is financial advice. Use it for entertainment or educational purposes only. But this is just kind of a loose idea of how I'm thinking about things. Things might play out completely different, but again, this is just how I'm looking at it. As you know, I do look at traditional technical analysis, but today, to get our baseline, we're going to look at some simple ratios from the last bull market to give us an idea of what happened last time, and if we follow a similar path, what could happen this time. I look at a few points: the overall cycle low, the most recent low just before the bull market breakout, and the overall cycle high. Prior to the last crypto bull run, HBAR bottomed out at just about a penny. That's why some HBAR OGs call themselves one centers. To be specific, that low in January of 2020 was at 0.97 cents. The last pre-bull launch low was at 2.75 cents around New Year's Day going into 2021. And the following cycle high was in mid-September 2021 at 58 cents. These represent a 60x off the cycle low and a 21x off the last pre-bull launch low. I will say that the 1 cent low was overdone at the time, so the pre-launch low is probably more reliable. Now let's look at the lows from this cycle. The overall cycle low was between Christmas and New Year's in 2022 at 3.56 cents. This past pre-liftoff low was just a few weeks ago in the beginning of November at 4.16 cents. As an aside, like the cycle low of 2020, I think the pre-liftoff low a few weeks ago was overdone. But back to the point. The ratios that we got from the last run applied to the more recent lows implied target HBAR highs between 88 cents and $2.14. These numbers would have made perfect sense just a few weeks ago before the run-up, but with the ferocity of the latest rally, they do seem a bit low, but again, it gives us a baseline. I also believe HBAR is going to have some fundamental drivers that, along with what looks like a great utility token narrative, could bode well for the HBAR this time around. Now let's move on to the timeline. Since we didn't have a full cycle in the last bear market as HBAR launched in September of 2019, I'm going to apply the duration between the last low before the bull launch and the cycle high in 2021 to the recent low. That was 257 days, which would give us a peak for this bull market on July 19th, 2025. Now, I'm hesitant to use a date in the summer, so I'm expecting a peak either in late spring or, like in the last bull runs, in the fall of next year. And of course, I would certainly prefer a longer bull market, but you never know. Now on to the most important thing, the strategy around one of these bull runs. The following is just how I do it, but your strategy needs to be personal and with the guidance of your trusted advisors. What's important is to have a strategy. Emotion is the biggest enemy of crypto investors and traders. To combat this, I use something I developed years ago before cryptocurrency even existed called the Dynamic Investment Program. It's a method for investing and divesting in volatile assets, and it's worked well to keep my head on straight in crypto bull and bear markets. In bear markets, as the price drops, it guides the investor to buy more, and as it rises, buy less. The risk of this strategy is as the price of an asset drops, you can run out of capital. As the old saying goes, the market can remain irrational longer than you can stay solvent. If the asset rises further outside of your purchase range, buying stops altogether. Then, as the price keeps moving north, as is important in a bull market, it will enter the divestment or sell range. Small amounts at first, and larger chunks as the price continues to move up. What makes the program dynamic is the sell price guidance shifts upward the more of the asset that is sold. This is taking into consideration that the last HBAR sold is more precious than the first. But I don't second guess the plan, though I do build in a core position which I won't touch. Beside that, I just set the plan around my anticipated target. For this run, it's $2.40 on HBAR. And if it works its way up to that price and back down over a year or 15 months with normal crypto volatility, the program will sell about 80% of my position. If it falls short, I sell less, but at least I take some profits. For example, during the last run, HBAR only hit about half of my price target, so I sold about 25% of my stack, but at least it was something. And for context, only hitting half might sound like a big miss, and it was, but remember it did a 58x off the low. If it had done a 2x from there, I would have hit my target. The reason I'm explaining my strategy is just because it's invaluable to have a plan as things enter the so-called crypto banana zone to eliminate some of the emotion that inevitably pops up. I just follow the plan, what happens happens, and I don't second guess it. So I do suggest developing a plan now. Tweaks are fine, but plans are made to be followed. As far as technical analysis, I do expect HBAR to break its previous all-time high, obviously, and this is known as a blue sky breakout, at which point it gets harder to know where things are going to go. That's why I lean on the ratios we discussed. I do take a look at Fibonacci extensions. Based on the current run-up and pullback, the 1.0 Fib extension level aligns well with the previous all-time high at 58 cents, so that's certainly a valid point. The 3.618 extension level is at around $1.50, so that makes sense as well, and we'll keep an eye on the other levels to see if there's any validity to those in the future. Now, there are some great technicians out there that follow the HBAR market really closely, including Credible Crypto and Cash Official and All In Crypto, and I suggest following the entire lot. I look at technical analysis as human emotion displayed in chart form, and that's very real. Tools like Fibonacci extensions also have an element of self-fulfilling prophecy. Many people are looking at the same numbers, they're planning on trading around them, so that gives them more credence. I look at it the same way for the 4-year crypto cycle in general. In 2013, we saw a run as early adopters first got involved. In 2017, retail entered in a bigger way, and there was the ICO boom. Leading up to the 2021 bull run was marked by corporations starting to enter, including Tesla, Square, and MicroStrategies. Leading up to this 2025 run, we're seeing ETFs and the hope of a much more conducive regulatory environment following the election. We also have the supply shock of the Bitcoin halving, and others in the space tout the liquidity cycle. With all of this, there are plenty of fundamental drivers, but part of the reason I think the 4-year cycle has legs is people expect a bull run, and their expectations and associated inflows of capital make it more likely to come to fruition. So I do think that there's going to be a continued bull run, but there could be all kinds of things that could influence this, including macro factors on the economy, but let's see how it all turns out.